Let's go to Algeria. How did you feel actually coming all the way after a long time?
Yeah, it feels nice.
Can you
We have a
decide?
very nice,
It's a nice space, eh?
super. We're impressed.
And there's been a lot of VIP treatment, eh? You can even sit there is coffee. You have a choice. Yeah? Right. It is the 24th May 2023. Another night, another hour of another great conversation right here on the summit, where we are scaling heights to be able to give you conversations that are actually around issues that matter to you. All these conversations right here are about all the key issues that revolve around the important things that matter to us. Tonight we have a very important conversation, and that conversation is around addressing financial inclusion challenges. And we'll be exploring practical solutions to access to finance, especially when it comes to the gender aspect of this. And let me just also introduce someone who's joining us from far and wide. All the way in London is none other than Dr. Mariana Lopez. She's the gender lead, United Nations Capital Development Fund. Thank you so much, Mariana, for making time to join us on the show.
Thanks for having me.
All right, I'll be coming back to introduce our guests who are sitting right here with us in studio. They made it all the way to be here in the studio, and I'll be making an introduction. I'm sure some of them, you already know them by face and some of the things that they do because of the interactions that you've had with them in various instances, but they'll be here to try and make sense of this conversation. Like we always say, the summit is your show, and it's the most interactive show on this particular side of the continent. And all we do right here is also to get to hear your views, your thoughts, and all you need to do is just get in touch with us. The hashtag to use as always is TheSummitRW. Listen, we are live across all platforms, including on YouTube, and so you have no excuse to miss the program. If you're not in front or close to a TV station, you can quickly run on our Twitter handle, or you can be able to check my Twitter handle, and you'll be able to find the link for the show tonight. I'll be coming back to this wall to read your thoughts, and keep a keen ear on the conversation. Listen carefully to what our panelists will be saying, and feel free to challenge those thoughts, or to air your views, or to add your own opinions around those particular issues. Now, let me introduce our able panel that is right here in studio. I have none other than John Bosco Iyachi, who's the CEO of Access to Finance Rwanda. Thank you so much for making time.
Pleasure.
I appreciate the promptness in actually accepting to come to have this very important conversation.
My pleasure.
Thank you so much. Patience Mutesi, a great friend, CEO of BPR Bank Rwanda PLC. A hearty The Summit congratulations, actually.
Thank you, Eugene, and thanks for having us
on the new role. Thank you so much for being here with us. And also with us is none other than Shema Steve, CEO of Access Limited. Thank you for making time.
Pleasure.
Also a last-minute entrant, and thank you so much, because we needed to have the voice of the fintech on this conversation. Thank you for making time.
Pleasure.
And like we said earlier on, Dr. Mariana Lopez, she is a gender lead, United Nations Capital Development Fund. Thank you so much, Mariana, for making time and for joining us on this show all the way from London. Let's start this conversation, and we'll be looking at the areas of access to banking services. We'll talk about digital financial solutions. We'll also look at the financial education and literacy, and then we'll delve a bit deeper into the regulatory and policy frameworks, and then partnerships, what needs to be done at the end of the day. And I want us to start off by some of the facts or statistics that I saw right here, and this will go to you, Mr. Jean Bosco. Today I'm going to break the rules. My mom taught me well, said ladies always go fast, but on this one, I want to start with John Bosco, because there are statistics here, and you say that overall gender gap in Rwanda has actually decreased to 1%, and this is according to your report in 2020. And this decrease of 4% difference in total financial inclusion in 2016 is actually pointing towards Rwanda moving closer to gender parity when it comes to gender or financial inclusion. Should we pack up and leave this studio because everything seems okay, no?
Well, it seems okay in terms of both formal and informal services that are given to women. But when you look at it, yes, clearly when you look at the gender gap, it's closing, actually slowly, from 4% to 1% in 2020. But when you look closer to the numbers and separate the formal and the informal, you find that we still have a 7% gender gap for the formal services.
Yeah.
And that's really something that also you see in terms of usage of financial services by women.
Yeah.
It's still reduced, and it's not at the same pace as men.
Yeah.
And I think we still have to do something.
We still have to do something. Patience, when you sit there and you're hearing this decrease in the gender gap in Rwanda from 6 to 1%, does it make you feel that, it's time for us to now take a chill pill, let's relax? Things
Absolutely not.
Yeah?
Absolutely not. Because I think it talks to accessibility. And when you look at policy today, a woman has similar access to, say, assets.
Yeah.
And so when it comes to accessing financing,
Yeah.
we don't have issues around their ability to access assets or properties that would then be held as security for the bank. So the accessibility is there. But then are we able to truly say that today men and women are seeking out financing in similar proportions? And the experience that we have in the banks is that the answer to that is no. We still have a lot of our requests coming from men.
Yeah.
We still have women-owned businesses shying away from borrowing.
Yeah.
And so that financial literacy is really, really important. So in as much as we're talking about access to financial services, that gap reducing, it doesn't necessarily mean that men and women or men and women-owned businesses are accessing financing to similar proportions.
Interesting. Shema, are probably the men doing this on behalf of their women? And so probably that is what is causing the statistics not to be as clear as they are? Or what do you think is the missing link? We're talking about 6, a jump to 1%. What do you think is contributing to this? And is it time for us to rest, really?
As she said, not really. There's still a lot of work to do.
Yeah.
But at least one has to appreciate what has been achieved and the awareness, at least from the women perspective. And for me, I'll speak from my own experience, especially working with women in rural areas, and looking at the awareness level, how that is really, growing. It speaks volume to the work, around. Many people say they don't. I mean, I for one don't like the word women empowerment because it sounds a bit off. But at the same time, if you look across Rwanda, how women are really taking or at least owning their place, especially now if you go in the financial sector, you'll see that there's something happening. And now even if you go from the bottom, going all the way up, there's something happening. But now what needs to happen more is now how do you diversify so that they don't stop there, because there's still a lot of space to cover.
Probably Anangwe.
Before you come,
yes.
just let's also bring in Mariana, because what we do here on the summit is we actually also open up the conversation to a level that is also inclusive in a way, in the terms of going all out to other regions. Mariana, where you sit, you've been an advocate on financial inclusion, especially for women, and this brings me to the issue around the area of the role of gender, because gender is considered as one of the determinants of financial inclusion. How significant is it? Because someone somewhere could be watching us tonight and says, does it really matter? As long as anyone can access finance, why are we really pushing in the aspect of gender in this? Maybe make some sense for us, or for those who actually need this sense in their heads tonight.
Of course, thank you. And I guess the question, well, first, women are half of the population. Let's start there. That makes it significant enough. That being said, it's not only about bucketing women into one group and saying we need to focus on this because it's a trend, because everybody's talking about gender, something we need to throw into the mix. The question is, if we truly want to have an empowered society, and I know empowerment is a loaded word, but it comes down to trust and control. If we want a robust and resilient financial system, if we want a growing economy, we need everybody to participate. And the reality is that women face different challenges than men, sometimes greater, but ultimately different. So what we need to do is recognize what those challenges are and bring it back to conversation. It's not just about access. You can have a bank account, you can have a more money account, and the more money account gender gap is much greater than just 1% in Rwanda. So the question is, how do we build real usage? How do we ensure that women have access to credit, to insurance? How do we make sure that they truly trust the system? And again, and feel in control of their finances, so they can ultimately not only feel that they have the ability to be resilient in the event of a crisis, but save and grow in the way that they want. Again, it's about a choice. Can we really say today that all women in the country, if not the region, have the possibility to make an informed choice about their future? And do they have access to enough financial tools to do so? That is a question to answer. And that is what we are buckling into this whole thing called gender.
Right. Interesting. And now I throw that particular question back here in studio, and the issue is on usage. It's not a matter of having or being able to own or have a bank account, but the aspect of usage. And this is where now we're going to talk about the access to banking services. And I want us to understand what is being done today to actually improve the access to these banking services, especially for those who are underserved, the population that are underserved. I know you mentioned in your report, that there's little information, little awareness, especially for people within the remote areas on even these available services. Let's start from there, and then we'll come to hear from patients.
Yes, thank you, Anangwe. Indeed, usage is a problem because, I mean, really, when you look at dormant accounts, that are out there, I think it's a huge proportion of those accounts that are opened. So, and you can't have better livelihood or well-being if you are not using financial services. An account on its own can't actually change your life. And that is really clear that something impeding that usage, especially for women, is in the gender norms that actually, and these are beliefs where different people feel like or perceive that women can do something or can't do something. And that really impacts that power relation that I think they mentioned, where actually they can't access collateral, they can't have, or they can't use it freely.
That still happens to date, 2023.
It happens. So we have a new report that was produced 2 weeks ago that really looked at gender norms, and you find that some people are still behind in terms of really appreciating that women can do business and can manage effectively like men, businesses, and that's really a big problem. So usage is still a problem, and I feel that usage also is constrained by the fact that most of the low-income people out there in rural areas, they don't understand, they don't appreciate, they don't understand actually what is on offer. Banks are trying to design innovative products, but really we need to educate that mass to understand that, yes, these products can actually support you.
Yeah. We need to educate the masses on how these products can assist you. I want to pick it from there and bring it to you, patients, not for you as an individual, but you as a sector, the financial sector, the banking institutions. When you sit with your peers at, the Rwanda Bankers Association, or when you're meeting to discuss some of the solutions, including this one of financial inclusion, that issue of awareness of the available banking services, what is being done from that front? Because it's indeed a challenge, as he says.
Absolutely. There's a lot that's happening in the financial sector. But at the end of the day, we have to realize that the banks on their own are not sufficient. They cannot fully meet the needs when we talk about financial services and accessibility to financial services. Banks on their own as a standalone are not sufficient, cannot fully meet the needs of the population. So this is where partnerships come in place and become really, really important. Banks, as you can tell, are usually set up to meet the needs of formal businesses for employed people. But this is the reason why we also have microfinances. This is why we have the fintechs that are coming on board to really see where the gaps are. And we recognize that there are gaps. And so the conversation is around what kind of partnerships can we be getting into to meet the needs of the various groups of people that we are serving, especially the underserved. And among the underserved, we recognize that micro businesses are underserved, partly because also the nature of the businesses we're talking about. A lot of the micro businesses are women-owned businesses.
Correct.
We did a study in the place I worked before, where we were we were talking about the whole financial inclusion discussion, and wanted to understand the nature of the businesses that exist in Rwanda. And what we found was that, I believe it was 63% of the businesses that were owned by women were micro businesses, in the sense that they employed a maximum of 3 people. Now, for a business that's employing 3 people with very minimal revenues, banks are not going to be the first place that they go to get capital. It will either be their family, or it will be microfinances. So we need to get into these partnerships with the microfinances, with the fintechs, with insurance companies, to make sure that we're able to really meet truly the needs of the different customer sets that we're talking about.
And where there are challenges, of course, opportunities are also available.
Yeah.
And this is where I want to bring in Shema, because we've had on the underserved sector. And this could portray or portend an opportunity for you within the fintech space. What are you doing there? And what should be done? And what probably are the problems that you're finding to be able to sort that group of people?
Maybe to start with the preamble, it's actually interesting that we're on the same panel with Access to Finance Rwanda. With whom we go back, where they sort of initiated a survey on what we know as informal savings groups back in 2015. And what this represents, if you take that and then you combine with the FinScope survey that they still initiate or rather finance, you'd find that the informal sector really plays a huge role.
Yes.
And in most cases, at least when you ask them, some of the reasons which obviously Pesh alluded to, is that some of the conventional ways banks go about business is not working for them. So most of them resort to such a kind of informal mechanisms. But then at the same time, you also have to acknowledge that there has to be a bridge between the informal and the formal sector. And in most cases, when you look at how these informal structures operate, it really requires an agile kind of setup, which the big banks that they can't really sort of, play around or fix, which obviously calls in the partnership with the fintechs. And this is the opportunity that we seized. And we've been doing it since then. And honestly, you see a lot of opportunities being, presented there. If you think of microloans, for instance. Because in this case, you're talking about unsecured loans. Because most of these people, they're doing savings of less than like 200 per week. Somebody who does 200 francs per week, obviously they don't own land in most cases. If they want loan, what do? Do they just give up on it? And you find such a kind of solutions whereby you bring in fintechs, the use of data, coming up with alternative credit scoring algorithm, which is something we are pretty much working on. So all of these things put together, realize that there's what banks can do, that where we need them, but there's also some of the things that fintechs, agile or more or less these tech solutions that are much more simpler and adapted to these informal, because they represent a huge portion of the financial segment. So that's why the partnerships are really key as far as achieving financial inclusion is concerned. And to end this, I'll just maybe put it back to you, because at the end of the day, when this topic is being discussed, one has to discuss, what does it mean being financially included? Does it mean just owning a bank account? Or how active am I in using it? Because you'd find that I have maybe 5 accounts and all of them are dormant. Does it mean I'm financially included? So this is also another conversation that needs to happen so that everybody within the sector kind of thinks about it and then maybe does something about it.
And I'm sure we have the representatives here, and you'll be able to talk to us a bit about what you feel the banking institutions are not doing that you feel they should do to be able to anchor your solutions to on that. On this particular issue of, what is financial inclusion? Of course, what I've been able to find out is that how people save, how they borrow, is one of or some of the measurements of financial inclusion. And of course also how they make payments and how they manage risks are some of the indicators of financial inclusion. But Mariana, I want to bring you on this particular one right here. We seem to be feeling, or what I'm hearing from this conversation so far is that, we seem to know where the problems are. But then how do we navigate creatively and be able to create sustainable sources of financing for those who are marginalized in this particular case? What are the barriers? What are the things that you'd be able to tell us from where you sit that need attention in terms of those who are within the spaces that are trying to fix the solutions or the problem?
Of it all. I just spoke about the definition of financial inclusion. What does it mean to be included? What does it mean to be financially healthy? to be resilient in case of a crisis, to be able to manage that, but also to be able to save and build something for the future. So that complexity in itself into the problem that we're trying to fix just calls for, again, different types of solutions. And then we just add even to the mix, we talked about the role of different financial service providers, banks, fintech operators, but there's also the role of the government. We need an enabling environment for all these providers to thrive. We need a consumer protection framework that covers them all. What we don't want to do is lose all the progress that has been made in terms of inclusion by having different players be differently regulated and then lose trust in the system because somebody was mistreated or failed to use digital credit in the way that they were supposed to. Lots of different cases, no need to dive into the specifics, but the importance is that that collaboration has to happen so that the providers and the government are on the same page and that ultimately consumer rights are protected. And we talked about educating the masses. What about civil society, NGOs, the role that all these organizations play in understanding their beneficiaries, those communities? What do, in this case, let's say, women want? We can't just assume that we know their needs and then therefore create a product that will meet those needs. We need to ask them, we need to bring them on board. We need to bring those representatives into the mix. So the first challenge, and it's again, collaboration. How do we bring all these parties together? Second, how do we align on the challenges that we should prioritize? We talked about social norms, we talked about access, infrastructure, cost. And then how do we come up with a plan? What do we tackle first? How do we avoid duplication of efforts?
Interesting.
How do we coordinate? Set a target.
Yeah.
So forth.
Interesting. And I want to bring back Jean Bosco because you've been coming up with these reports, and I want to understand, or probably for the sake of our viewers who are watching tonight, what next after these reports are out? Several of them have come out. Of course, some are showing us good news, but also raising a red flag that, hey, it's not time to celebrate just yet. How do you then measure the impact of these reports in terms of the recommendations that you make? Do we put them on the file and the shelves and they gather dust and then we move on and wait for the next report?
No, good question. I think Rwanda as a country has walked a journey, and an interesting journey. I recall the first FinScope survey that was done 2008. We had 52% of the adult population that is excluded from the both formal and informal financial services provision. When we look at and every 4 years we track that landscape in collaboration with the policymakers, the Ministry of Finance and Central Bank and other players in the market. And what we have seen is that really we have been progressing until now. I would say until 2020, where we have the latest data, where we have 93% of the adult population that is included. And clearly, when you look at that, exclusion is only at 7%. Now, have we reached there? No, not yet, because I come back to really differentiating both formal and informal. I appreciate the value that informal is bringing, but really when you look at the formal financial services, we are still at 77%. So we need to do something to formalize, because really there is value with formality, formalization. And I think digital technologies can help that. Partnerships with fintechs, I think that's really possible. So we shouldn't stop there, because Rwanda as a country has a target of achieving 100%, and that's possible actually, by 2024, which is next year. So we are yet to, in fact, we are planning to carry out another FinScope, which will be published early next year. And that will once again show where we are as a country, but also point out some recommendations for financial service providers, what they can do to ensure that the gap is closed over time.
Interesting. Patience, also coming to the issue, just alluding to what Mariana mentioned, the collaborations, who does what to avoid duplication of responsibilities and all working towards a common goal. From the banking sector perspective, is this even a concern? Because private banks, a lot of people would argue that, we are here for business and we'll serve those who actually want, and we look at the return on investment. Are the informal sector, those who probably have no proper knowledge of this whole, profit aspect, part of your headache? And if they are, How are you dealing with that issue from a banking perspective?
Good question. I think I talked about the partnerships and
Yeah.
the fact that in our DNA we have partnerships. So we partner with microfinances who we recognize are able to reach where we are unable to reach.
Yeah.
We partner with SACCOs who have a much bigger network than we do. But I'll also throw in a plug for BPR and say, when you look at our branch network, 154 branches across the country, the widest branch network of any bank.
You could have been the ones contributed to the reduction, 1%.
Absolutely, absolutely. I know that we're playing a big role in contributing towards that narrowing of the financial exclusion. Because of our branch network, we're able to reach where no other bank can reach. And so it continues to be something that is very dear to us on how we can reach our customers.
Yeah.
But then also as banks, we recognize the fact that banking has changed. It's no longer the brick and mortar. It's not about the branches. And so you see a lot of banks which are doing a great job in terms of enhancing their agency network. So agency banking is really, really important for us. Yeah. In fact, one of the things that we're looking to do this year is really expand our agency banking network. In addition to that, just leveraging technology to reach where our brick and mortar would not be able to reach. Yeah. So you have smartphone penetration is still very low in Rwanda. I think we're talking about somewhere between 25 to 30% smartphone penetration. And I know the government and other players are doing a lot to increase that penetration. But we still have people who don't have access to smartphones. So we say, even for someone who doesn't have a smartphone, they need to be able to access our services through USSD codes. So we have services that they can access. In fact, all the basic banking services you're able to receive through our USSD codes. We have mobile banking, we have internet banking for the formal businesses. So this is something that is dear to us. But more importantly also, you talked about the micro loans. It's not some finances and micro businesses. It's not something that we're leaving to the microfinances. We're thinking about what we can do even from where we sit to include the micro businesses. So among the things that we're doing is creating micro solutions, including savings, because we think that it's really important to encourage the small businesses as well to be able to save. So micro savings, micro loans that can be secured.
It is coming up to 34 minutes after the top of the hour. We continue with the program, and of course we are conversing around the issue of access to finance, and of course the matter of inclusivity is our subject matter. Before we got that interruption, Patience had mentioned a few other issues, including what they are doing from BPR perspective, and of course the banking sector at large, and the fact that the micro businesses are indeed a section that they are concerned about. And I want to bring in the issue of the digital financial solutions in this conversation. And this is where I bring in Steve. Steve Shema, of course, you've been toiling, you've been working hard with your peers who are actually giving us fintech solutions that actually banks are actually also incorporating in their processes in terms of payments and all that. However, there's been a key overriding challenge, and this is cybersecurity. It becomes a big problem, especially for everybody who wants to look at digital financial solutions as a solution to financial inclusion. And this actually does scare away so many people. Let's talk a bit about that and how probably a lot can be done to tighten the loose ends so that you become part of a solution but not part of the problem itself.
Yeah, that threat is always going to be there. I don't think it has just been introduced into the market or whatnot. But then at the same time, I'd probably like to mention two key players that really ensures that is kind of mitigated to a large extent. Yeah. The first one is obviously the regulator. And the central bank, there are many agencies that have been coming up lately to look into be it cybersecurity, be it consumer protection. And obviously, if you look, at least in our case, we've been engaging the central bank, you'd see that there's that awareness from their end. And every time we engage them, they really want to really understand the measures that we're taking to mitigate some of those things. So which obviously means the fintechs, we've got to do our homework. And the second layer to that is lots of things we can't do. We might have great ideas and all of that, but we need to partner with banks. And trust me, banks, they have compliance department. So obviously, they'll challenge the system. And whenever they see that there's some security loopholes in whatever it is you're doing, they won't be moving forward with you. And that is where you need them again, because they've built this expertise over a long period of time. So I think those two layers, they sort of help. Because if you see fintech that's not only passed through the regulatory process, but also working with the bank, that means they've done their homework properly. So I think at the same time, threats are always going to be there, but you've got to have ways to mitigate some of those. So which means, obviously, when you're coming up with a solution, you've got to be mindful of that. But even if you're not, some of these other layers within the ecosystem are going to challenge you.
Right.
And
So one, I'm worried at one point that we are not just going to be solving the issue of cybersecurity. It's like, rest assured, Eugene, this problem is going to stay here. It's here.
It's here forever.
But I'm also interested in hearing from what Mariana thinks in this sense, because we are already talking about an issue that is not well known, the issue of the banking solutions, the fintechs, because we talked about the financial literacy. And now here we are talking about even the threats that actually, when you just mention a threat to someone who doesn't really have full information about something, you really definitely are pushing them or scaring them away in one way or another. Talk to us a bit, Mariana, about the place of the digital financial solutions in empowering women specifically when it comes to promoting their financial inclusion. And what are the challenges that you feel need to be looked into other than the issue of cybersecurity?
The challenges, and I keep saying this word, is complex. When we're talking about this new buzzword, digital public infrastructure, which is cybersecurity, data protection, data localization, infrastructure, connectivity, it's all interrelated. It cannot be fixed by one stakeholder. It's a challenge that will take some time, but it ultimately comes down to that. Partnerships, innovation, sandboxes, engagement. When we think of financial literacy, there's a very direct link to consumer protection. In many cases, a lot of the challenges that, again, we say women, but let's say underserved or vulnerable populations face are because they are unaware of these challenges, because they lack the digital skills or the financial education to be able to tackle them. And that is no fault of their own. It's simply, again, a challenge that we need to address, recognize, and address. In many cases, central banks are, again, seeing this issue and this connection and really bringing it together. There's no point in having a perfect, compliant, or redressal mechanism in place if you don't advertise the fact that it is such. If people don't know who to call when they have an issue, if they don't trust that when they call, their issue will be fixed. So when it comes to women, and the challenges that different groups face, we just have to add another kind of lens of challenges. Think, for example, social norms. Again, we talked about it before. If you have limited mobility, if you have a lot of household responsibilities, if you have all these things going on throughout your day, and then you use surveys and you're a victim of a scam, and you don't know who to call, you don't have the time to go to the branch, even if it's close to you, and you don't trust your friends to be able to talk to them about them because you know that they may not have the right information, because you're scared to tell your husband that you made a mistake and lost some money, what do? How do we ensure that those women who are vulnerable, who are trying to use financial services to improve their lives, actually are aware of all the different avenues that are available to them, not only to use the services, but to act when they feel that they have not been given the benefits that they signed up for? Again, we're trying to build trust in the system and resilience. So when it comes to financial literacy, again, it's about partnerships, it's about education, it's about making sure that product services come with the right disclosures, with the right information, and it's about making sure that everybody has different options to access such information.
Right. Interesting that you say that. And I want to bring in John Bosco here. John Bosco, especially from the recommendations you keep making on these reports that come out. And I like that Mariana brought out that issue of, look, first of all, societal norms. And here you are as a woman, you've engaged in digital financial solution, and then you've lost the money. How do you go back to explain that, hey, look, this money is gone? Of course, in that particular sense. Talk to us a bit about, one, what exactly needs to be done, because like, he mentioned about the fact that cybersecurity is here to stay. I don't want us to hear that also societal norms that not favor women are here to stay. Come on, we can do better, no?
Yes, and we should, in fact. Well, yes, cybersecurity is a threat that is always there, and I think those are risks that are always there in life, and you need to make sure that you have mitigants over time. But in terms of social norms...
Maybe from a policy perspective, what do you want the policymakers to do?
So I think, well, there are clear infrastructures that really, I think connectivity to some central processing infrastructure is very critical. And I'll give you an example of the Rwanda National Digital Payment Scheme that is being developed under RSwitch. That's a scheme which is creating interoperability between the different electronic or digital payments platforms in Rwanda. And when everyone hooks to that, that means really integration is through one platform. It's easier, it brings efficiency, but also because you have, yes, I understand that would be a huge risk because you have one infrastructure for the country. But still, because you have consolidated that, that infrastructure is well protected because really, it can have the muscles to do that because it's aggregating all these transactions. But also, when you look at, they talked about the different policies and policies and strategies that are in place, and these institutions that are overlooking all of these to make sure that they are implemented. In fact, we have a data protection, personal data protection law, which is being enforced, I think, in October or November this year. Clearly, all of those laws is to ensure that anyone who is playing in this sector is protecting the users in terms of privacy, in terms of all those attacks, really, and the regulators have that mandate to check that and ascertain that people are safe.
The buck stops with who? Maybe Patience. Who does the buck stop with? When someone who says, okay, finally there's a solution that is going to make me financially included, then they jump into it, and you are the financial institution, the bank, you've partnered with a fintech solution, and then boom, things go wrong. Buck stops with who?
The buck stops with the different players on board, because right now we can't even just talk about banks as a standalone or even fintechs as a standalone. We cannot ignore the important role that mobile money solutions are providing. That's also, they play a significant portion. I think I was looking at the data, and right now we have about 150% of our GDP equivalent that is going through mobile money payments. That's a significant part of money that's going through that system. So I think the backstops...
Does it worry you?
No, it's actually a good thing.
As a bank?
It is a good thing. It's a good thing that money is coming out from under the blankets, under the mattresses, where it has traditionally been. It means that people are keeping it within the system, so that's great. It's great for the development of this country. It's great for the well-being of people, so no, it doesn't worry us. In fact, more and more we are thinking about what is it that we can do to partner more with these telecom companies and the mobile money providers, so that we can even go deeper, because that 150% of GDP, it could be more.
Right.
Could be more.
And proceed, sorry.
No, please go ahead.
Okay. So I was going to ask you, I know there are so many things you said earlier on before we got that interruption. And what I know is that probably as banks, you sit somewhere and you really wish to do so many things. You wish to fix so many loopholes or gaps somewhere. But you know you can't, because you have a regulator who's actually watching behind and says, this one no, this one yes. What are those things that probably you sit back and you say, as financial institutions or banks, you feel that, probably you hit the wall just because of the regulatory framework?
Oh, let me just say, by the way, our regulator wants us to do more. They push us to do more.
Nice.
So they don't stop us. They actually push us to do more. But keeping in mind that at the end of it, it's about protecting the consumer. It's about protecting data. It's about protecting systems. At the center of everything that we do is the consumer. So the regulator constantly pushes us to do more, but without putting the consumer at risk, right? But to tell you honestly, among some of the things that we want to do, when you talk about access to financial services, you're assuming that the banks and other financial services providers are coming in to serve a need of an existing enterprise. Today, the biggest problem is not really that the enterprises are not requesting for financing. It's also because the formation of these enterprises are very low, right? So if we talk about even just starting a business, there's formalizing a business, there's so many people who are not taking that step to formalize the businesses. And if the business is not formalized, it's very difficult for a financial services provider to provide a solution. So among the things that we would want to do is participate more in this financial literacy, in, what are the basics around starting a business development services. And this is where partnerships come on board, because part of the partnerships that we're looking at is partnering with business development services providers, so that even as we are talking about improving access to finance, we are also looking at a pipeline of customers, right? Yeah. So we need to increase the number of existing customers who are borrowing, which is also still very low. Yeah. I think for most of our banks, we are talking about less than 30% of our customers being borrowing customers. So why is it that the 70%... So
you're saying the money is there, but people are not coming to take the money?
And this is existing customers, right? Yeah. Existing customers are not borrowing, but we're also not seeing the pipeline of formation of businesses being sufficient, and and also formalization of the businesses. A lot of businesses are remaining in very informal infancy stages. So there are very many layers to this access to finance part that we would like to tackle, but one of the things that really stands out is around formalization of businesses, encouraging existing customers to also borrow for the different needs that they may have, and just increasing our penetration within the country and beyond.
Yeah.
Yes,
I'll share the same question to Steve.
Yes, if I may jump in here. Again, shameless plug to Access Finance Rwanda, the work they're doing in the Central Bank. Just a few months ago, they launched, there was some data on some of these informal schemes. And just to give you a bit of numbers, as of 2021, we were counting over 2.2 million people in informal savings schemes. Yeah. In one quarter, they transacted over 50 billion in savings. Yeah. And that's in chunks of less than 10,000 Rwandan francs. And for me, when we're discussing with banks, I always challenge them to, I think I would call it some kind of obsession, I don't know, or obviously, no pun intended, of formalization. Because at the same time, you see, when we talk about these homegrown solutions, because these people, they have, we're talking about people that are transacting 50 francs, 200, 5,000. Yeah. And then a bank is like, if you need service from me, you've got to have an account. And the person is like, well, if I look at the amount of money I'm transacting, it doesn't make any sense. But if
especially
you take
if the bank has charges, maintenance charges.
But if you take these people, you amount them, it's just huge. Yeah. And the conversation, what we've been proposing, and this is a conversation we've been having with different stakeholders, including the central bank, why instead of thinking of formalization of these informal schemes or whatnot, how about you flip it around a little bit and then think about formalization of channels and start with that? Because at the end of the day, when these people grow in terms of how much money they're transacting, they become mindful and aware of the risks. And you won't have to ask them to go to RDB or to go through formalization, because it will become inevitable. But then if you want them to say, okay, this is a condition for me to give you a service, you've got to become formal. They're like, okay, if that's it, then we'll probably come up with a coping mechanism. They'll just come up with their informal structures.
And they say one man's meat is another man's poison.
Exactly.
So if it is their poison, then it is your meat.
Exactly. This is where we come in. Exactly. And
so let them just stick to that, and then you do your thing.
But at the same time, it takes two to tango. Yeah. Some of these things we can't do it ourselves. So we need them. So we need to have this convergence into understanding some of these things. Right. Because I give you an example. We work, like, okay, somebody's doing 500 per week, and then you want them to open an account. Yeah. It's like, what if I use my mobile money, like all some of these digital channels, but then I'm very frequent in terms of transaction. Like, for instance, the people we work with, these informal groups, they do thousands of transactions per day. Cumulatively, they amount to a lot of money.
Yeah.
But then, this money is sitting in the bank. So what is, instead of pushing me away and you opening your arms, and then be patient with me, because I need to build that capacity. I need to build that understanding. And by the way, another shameless plug to NGOs are doing a huge work when it comes to awareness, financial literacy, digital financial services, all this kind of stuff. And then if you look at a FinScope, you realize that the informal sector obviously plays a huge role. And there's an organic growth that, from being informal, feeding into formal sector. So I think that's what the conversation that needs to happen.
Perfect.
To bring it about.
I'm told we have just about 4 minutes to go, and I want us to share those 4 minutes to try and just recap or try to understand deep in our hearts, what don't we want to leave this studio not having mentioned, and especially from a solutions perspective. Where do we go from here? I want to start with you, Jean Bosco. What do we do from here? We've had the problem, we know the solutions, we've talked about what we need to do. How do we proceed from here?
Well, I would say that when we talk about underserved or excluded, underserved, I would say underserved segments. Who are they? They are people living in rural areas, they are women, they are youth, smallholder farmers, MSMEs in productive sectors like agriculture, manufacturing. All those are not accessing enough credit or enough capital, I would say. Not really banks only and fintechs, but I mean, there are other needs, really. There are other players in the market that can satisfy those needs. I feel like it's very important that we are deliberate to understand those needs that they have and deploy the right solutions and channels and forge partnerships that are mutually beneficial.
Be deliberate.
Yes.
Be deliberate. That's the point.
No, I would totally agree. It's about partnerships. It's about people understanding that no single player can do it on their own. Banks on their own are not able to do it. But I also wanted to say something about what Steve was saying. We shouldn't forget that fraud is a real issue within the financial services provider. And that's why when we talk about formalization, the real reason behind it is that anti-money laundering and know your customer is a real thing, because you want to be able to trace money. And so even as we're talking about what more can we do, when we talk about formalization, it could be those groups of people put together, but under what structure? They need to have a structure that can be traced, right? So anti-money laundering and KYC, regulation is very important. We want to do more, but it's really important that at the end of the day, the customer remains at the center of everything that we're doing. And it's really, really important that we meet the needs, and we cannot do what we want to do or what we need to do without truly understanding the needs of the segments that we are serving. So for us, it's really going out there and trying to understand what is it that we can create, what is it that we can innovate to meet the needs of the customers.
Ears on the ground.
Ears and feet on the ground.
Feet on the?
On the
feet
ground.
on the ground.
Okay, ears and feet and okay.
Feet on the ground.
Yes, my 2 cents is, again, it's a challenge I want to throw at the banks. People like, organizations like Access to Finance Fund have done, and NGOs are doing huge work in terms of awareness or doing all these researches. But then if I was just, I'm not a banker, by the way, so don't take my word for it. Because given the challenges at hand, banks and they need to think outside the box. And for me, my challenge would be, I wish every bank would have some department that looks at, fintech bank partnership kind of stuff, whereby they rethink. Because some of these things, banks are willing to do it, but then maybe the how becomes a little bit problematic. And especially these informal structures that are there, and trying to create those bridges. Because fintechs alone can't, and banks alone can't.
Will not be
so
able to
partnerships are really key to bring that about.
Perfect.
Yes.
I don't know if we still have Mariana on the line, but as we check on that, I want to read just real quickly. There's a viewer who says, what would you say are some of the barriers and opportunities for women's financial inclusion in Rwanda? Also, how can gender-specific challenges be addressed to ensure equal access to financial institutions? Just 1 second, Jean Bosco.
Well, the challenges that are there, I talked about really, I mean, when you look at Rwanda, the legal, regulatory, and the regulatory environment is very conducive.
Yeah.
And we know it. And access to assets, I mean, is there. But the issue is about power relations.
Power relations.
Who is controlling the power?
Okay.
Can we work on that so that women can actually access and use assets for them to be able to access financial services from these providers?
Okay.
So that's very critical, and I think there are so many solutions in the market, and there are some schemes that are coming from AFR as well, even to provide collateral cover for women.
Interesting.
That will be coming soon.
Perfect. Mariana, I'm told she's there. Just under a second, or okay, under a second is not realistic, Mariana. Just probably under a minute, probably. Just real quick, what are your take homes from this conversation? Where do we go from here?
Thank you. I don't think I can do this in under a second, even if I speak very fast. But I would say put the consumer first. That's the first step. And second, listen to women. If you truly want to challenge power relations, if you want to build a resilient economy, ask women what they want. What are the challenges they face? Consumer protection, fraud, cybersecurity. Again, you need to bring them on board. If you truly want a gender intentional policy, you need more than just having a group of women sign it off. You need to really get to the bottom of it. Feet on the ground. Ask them what they want and address those needs.
Interesting. That's a powerful one. Ask women what they want. And since today I'm the one asking questions, I'm going to ask Patience because there's something I want. She mentioned there's money, but people are not going to take the money. So I want money. Thank you so much all for being part of this conversation. Mugambaje Richard says the focus should be put to youth aged between 16 to 24 years who are still lagging behind. TVETs and IPRC's graduates and other Starbucks lack capital, and so it is important to look at this. SACCOs have tried to finance informal sector and SMEs, but more products focusing this segment is very necessary. Thank you so much for your feedback on this. Cyrus Musi says, what steps have been taken to promote financial inclusion in Rwanda? My question goes to Patience. This, I think, Patience will be able to respond online because our conversations never end on these four walls. They continue across digital platforms, including Twitter. All you need to do is add the hashtag TheSummitRW. We'll be able to continue having this talk. It's just the beginning. We do the conversation starting, and then the conversations continue. So keep in touch with us. We'll see you again, same time, same place. Thank you to all our panelists. Thank you for making time. Thank you, Mariana, for also being part of this. As always, my name is Eugene Anangwe. Goodbye for now.